The Invesco QQQ ETF is a popular choice for investors seeking exposure to the technology sector. This exchange-traded fund tracks the NASDAQ 100 index. This index comprises 100 of the largest non-financial companies listed on the NASDAQ stock market. QQQ is known for its heavy weighting in technology giants. This makes it a compelling option for those looking to capitalize on the growth of the tech industry. QQQ offers a targeted approach for investors. It focuses on the innovation and growth potential of leading tech companies. These companies are often at the forefront of groundbreaking advancements. They drive progress in areas like artificial intelligence, cloud computing, and e-commerce. By investing in QQQ, individuals can gain access to a basket of these influential players. This allows them to participate in the potential gains of the technology sector as a whole. QQQ's focus on large-cap tech companies has historically been a significant driver of its performance. As technology continues to reshape our world, QQQ remains an intriguing option for investors seeking growth-oriented investment opportunities within the stock market. Before diving into QQQ's performance, let's examine some key facts. QQQ has an expense ratio of 0.20%. This means that for every $1,000 invested, $2 goes towards management fees. The ETF was incepted on March 10, 1999, marking over 2 decades of tracking the tech-heavy NASDAQ 100. Now let's look at QQQ's top holdings. As of today, the top 5 holdings are Apple, Microsoft, Amazon, Nvidia, and Tesla. These companies represent a significant portion of the ETF's portfolio. This highlights QQQ's concentrated exposure to a select group of mega-cap tech companies. Each of these companies has a dominant market position and a history of innovation. Apple, known for its iPhones and Mac computers, continues to be a trendsetter in consumer electronics. Microsoft, a leader in software and cloud computing with its Azure platform, remains a force in the enterprise technology space. Amazon, the e-commerce giant, has expanded into various sectors, including cloud services with AWS. QQQ has a history of delivering strong returns. Over the past 5 years, the ETF has generated a cumulative return exceeding 100%. This translates into significant growth potential for long-term investors. To put this into perspective, a $10,000 investment in QQQ 5 years ago would be worth over $20,000 today. However, it's essential to remember that past performance is not indicative of future results. This impressive track record is partly attributable to the remarkable growth of the technology sector during this period. It's crucial to consider potential risks and market fluctuations when evaluating QQQ's potential for future returns. While QQQ's historical performance can be enticing, investors should approach it with a long-term perspective. The tech industry is known for its cyclical nature, with periods of rapid growth followed by corrections or slowdowns. Therefore, investing in QQQ requires a degree of risk tolerance and an understanding that short-term volatility is possible. Section 4. Navigating the risks, concentration, and market volatility. While QQQ offers considerable growth potential, it's crucial to acknowledge the risks. The ETF's high sector concentration exposes investors to the performance of a limited number of companies. If these companies face challenges, it can significantly impact QQQ's overall value. Moreover, QQQ's heavy weighting in tech makes it susceptible to market volatility. During bear markets, tech stocks often experience more significant declines compared to other sectors. This heightened sensitivity can lead to substantial drawdowns in QQQ's value. Additionally, QQQ's lack of small-cap exposure can be a drawback for investors seeking diversification. Small-cap companies, while riskier, offer higher growth potential. QQQ's focus on large-cap stocks may limit exposure to these emerging players. Section 5 Conclusion. QQQ, a high-growth, high-risk proposition. In conclusion, the Invesco QQQ ETF is a powerful tool for investors seeking to capitalize on the growth of the technology sector. Its focus on large-cap tech companies has fueled impressive returns, making it an attractive option for growth-oriented portfolios. However, potential investors should carefully weigh the risks associated with QQQ's concentrated holdings and market sensitivity. Understanding the ETF's composition, performance history, and potential downsides is crucial for making informed investment decisions. Ultimately, QQQ is best suited for investors comfortable with its sector bias and potential for volatility. Those seeking a more diversified approach may consider complementing QQQ with investments in other sectors or market segments,